Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Monday, August 2nd. First trading day of August. We're already up 200 points on the Dow. Now this is interesting. We've had six straight months of nothing but higher levels on the stock market. Is this normal? I don't think it is. Normally in a year we get at least two corrections of 10%. That would be normal. This year we've done nothing but go up, higher and higher. And August, here we are again, taking off like a rocket ship. Now, what I want to talk today about is what keeps me up at night. What gives me nightmares? It's called debt. Now, the United States is roughly $28.4 trillion in debt. Now, the debt ceiling expired. I don't know if you know that. It was suspended by Donald Trump for 2 years, which the suspension ended in July 31st. Okay. So we got to get Congress to raise the debt ceiling again. Now, this is nothing it's going to happen. Let's just say that. The debt ceiling has always risen higher and higher and higher. As a matter of fact, since 1960, we have raised the debt ceiling exactly 78 times, and we're going to raise it again. There's no limit to the debt ceiling, but what I want to just talk about is, common sense economics. Now, I do have a degree in economics, but what I'm going to talk here about is just common sense. Okay, I think we're going to hit $30 trillion in debt by the end of the year. We're at $28.4 trillion right now. We get that infrastructure passed, we're going to hit $30 trillion. All right. So, why is that a bad thing? Well, let's think about it. Okay, at roughly $30 trillion, we spend $400 billion just in the interest on it. Now, that interest is at 1.2%. That's what the 10-year bond is trading at right now. The government borrows money at 1.2%. So about $400 billion to make payments, just interest, just money that we throw away each year, just paying the interest on the debt. Okay, that's not bad. It's not bad, right? Okay. Well, let's say that could interest rates double? Could they go from 1.2% to 2.4%? Now, I'll tell you, interest rates normally run about 6%. So they definitely could go from 1.2 to 2.4. That wouldn't even be normal. Normal's about 6%. But if they doubled, well, you'd get about $800 billion just to pay the interest on the debt. Now, once again, that's not necessarily bad. We bring in tax revenue. That's how the government collects money to pay the debt and make its payments to pay its bills. Okay, so we bring in tax revenue, about $3 trillion. All right, $3 trillion. Now, that sounds okay. So we're at $30 trillion, roughly. We're going to hit $30 trillion this year in debt. Now, in 2008, right before the financial crisis, we were about 10 trillion in debt. 10 trillion, and now we're reaching 30 trillion. Okay, and that took about 13 years. Now, I believe that we're going to double the debt we have right now, that's called 28 trillion, in the next 5 years. We will double it, because it's like a heroin addict, okay? You need to inject more money, not the same amount of money. The debt is kind of going parabolic at this point. It's just there's no end in sight. We have to keep printing the money, otherwise everything crashes, right? I mean, we're going to get real estate crashing, stock market crashing, and nobody wants to see that. So we're going to keep printing the money, and the debt's going to go parabolic, and we're going to keep putting that money into the stock market, into the financial assets like real estate, but we have to keep accelerating it at a quicker pace. So I think we're going to double the debt in the next 5 years. So we're going to go from 28 trillion to 56 trillion. Okay, now 56 trillion, now that's really not that bad, right? Okay, $56 trillion, well, let's just say that we pay $400 billion in interest now. So that would put it at $800 billion. But if we double the interest rate just to 2.4%, well, that $800 billion would become $1.6 trillion, $1.6 trillion just to pay the interest on our debt. Now, this doesn't include the unfunded liabilities that the United States has. Now, unfunded liabilities, they scare me. They scare me a lot. We have about $150 trillion worth of unfunded liabilities in the United States. Now, what's an unfunded liability? It'd be things like Social Security. It'd be things like Medicare. Now, Social Security, it's over, unfunded Social Security is about $20 trillion. Unfunded Medicare is over $30 trillion. But we have these unfunded liabilities in the United States that are about $150 trillion of them. If you ever get a chance, go to debtclock.org. I mean, it's usdebtclock.org. You can see these numbers. They just keep growing. I mean, it's fun to watch, but it's scary. Now, at some point, with these unfunded liabilities coming due, with the debt ceiling going to be lifted, I think we're going to double the debt, and we're going to increase it in the next 5 years. We're going to double it, I think, and these unfunded liabilities, they're going to become due. And the interest payments, now the interest rates right now are interesting, because on the 10-year bond, it's 1.2%. Now, what's inflation run? Inflation runs about 5 or 6% right now. That's just what the government's admitting to. So we really have a negative real interest rate of about 5%. You take that 1.2 minus 6% inflation from it. We have a negative interest rate of 5%. This just isn't going to be able to be sustainable. Something's going to have to give. Now, will interest rates start to go up to start to fight the inflation? What if they did normalize? What if they went to 6%? What if interest rates went to 6%? Well, we would basically become, the United States of America would become what's called a zombie country. We would be zombies. Think about it. We would not be able to bring in enough money in taxes just to pay the interest on our debt. Now, zombie companies are common in the stock market. The S&P 500 right now has about 20% are zombie companies. These are companies that don't bring in enough money to even make the interest payment up on their debt. They're called zombie companies. And what's normal is about 2%, but right now we're running about 20% zombie companies. In the United States, it looks like it could become a zombie country where they don't even bring in enough money to pay the interest on the debt. The United States could be a zombie country. Think about it. Right now, we have $150 trillion in unfunded liabilities. I mean, that's $500,000 for every United States citizen out there. That's how much they owe. Do you have $500,000 set over just to give the government for your share of the debt? I don't think you do. Maybe you do. A lot of people do. Jeff Bezos does. Elon Musk, maybe he can pay some of the debt off. But I'm telling you, the United States is headed for what would be called a zombie country. The U.S. is not going to be able to make their payments on the interest alone. They're not going to bring in enough tax revenues. Now, you say, Mike, you're just negative. You're just gloom and doom. I don't want your channel to become gloom and doom, but you're just being negative now. And I agree with that. So how do we fix the problem? How do we got to look for solutions. Now, the solution is to fix the dollar. See, the dollar, it's just a fiat currency. It's not backed by anything. Where we really had the first U.S. default was when Nixon took us off the gold standard. That was back in 1971. He defaulted. You used to be able to trade in your dollars at $35 and you get an ounce of gold. And Nixon said, no, we can't do that anymore because we're printing too much money. Took us off the gold standard. That's where the U.S. really defaulted. Well, if you want to correct the situation we have now, you're going to have to get back to a gold standard. I hate to say that. A lot of you think it should be a Bitcoin standard, but think Bitcoin is also a fiat currency backed by nothing. I want my currency backed by something. I want it to be sound money. Now, the term sound money is actually fascinating. Sound money, there's dollar bills. When you drop them on a table, they don't make any sound. Now, gold and silver, that's used to be real money, and that's still real money today, in my opinion. When you drop gold and silver on the table, they make a sound. It makes a sound when it hits the table. That's what sound money is. Bitcoin, what does it make when you drop it on the table? It doesn't make any sound. It's not sound money. I think you have to go back to sound money. Now, in the United States, I don't think there's a chance of this. The Fed, they kind of have to go until it blows. And this is going to blow up, but they just have to keep printing money as fast as they can until it blows. That's their mentality. Go until it blows. That's what the Federal Reserve's going to do. But now you can protect yourself. You can get the sound money. You can trade all your fiat currency for real money, gold and silver. I think you'll be better off in the long run if you do that. Fiat currency, the dollar, I think the dollar's going to die. It's sad. And you know what's sad is watching the U.S. become a zombie country. Not a company. The S&P 500 has 20% zombie companies. But the United States is actually going to become a zombie country. There's no stopping it. The Fed's going to go until it blows. This is what keeps me awake at night. Now, maybe, when I talk about this with people, it's depressing stuff. People don't want to hear about it. They don't want it. Mike, I don't want to hear about that. That truth stuff. That stuff scares me. And you don't have to be an economist to understand this. This is just common sense. It's just me and you talking. Look, I don't have anything to sell you. There's nothing in this for me. I'm just warning you of what could happen, and what could happen relatively quickly in the United States. I love this country, but it is not on a good path right now. We have to protect ourselves, and I think the way you do that is getting some gold and silver. Now, things may all crash down, and gold and silver may come down with it. So you do want to have some cash also. Those are the two ways to protect yourself. Have some cash to buy things when they do crash, and gold and silver to protect you when we get this inflation of the Fed just printing. They're going to have to print hundreds of trillions of dollars just to stay in business, and they don't want to lose power. They want to keep the power. Now, this stuff is scary to me because it just is. It's not going to end well, but you can protect yourself. Now, if you like this stuff, give me the thumbs up. If it scares you, you got to stop watching. But if you like it, give me a thumbs up. If you really like it, punch that subscribe button so we can talk more. I don't have many people to talk to this about. I only have you and me. We can talk because we're not afraid of the truth. We look for ways to protect ourselves, and that's what we want to do. We want to get some gold, maybe some silver. We want to get out of the fiat currency. It's just not doing well. They're just destroying our dollar. They're destroying it. So anyways, give me that thumbs up, and let's talk again later in the week. August is off to a booming start, up 200 points on the Dow. We'll see how this all plays out. I'm Tall Mike. Get out there, have a great Monday, and we'll talk again soon. Bye-bye now.